Most people spend their entire lives chasing a bigger and bigger nest egg, saving, investing, and hoping it'll be enough to finally retire. But what if I told you that the real secret to freedom isn't about how much you save, it's about building an income factory that pays you month after month, whether you work or not? Hi, I'm Dr. Jeff Anzalone. Years ago, I followed all the traditional advice. Work hard, max out the 401k, invest in index funds, and save for a someday retirement. But after a wake-up call about 10 years ago, I realized I was building the wrong thing. And in this video, I'm going to show you how to escape the retirement trap and build your own income factory, the strategy that can make work truly optional, not just someday, but much sooner than you think. Let's get going. So let's first talk about the traditional path that will inevitably lead to failure. For decades, we've all been told the same story, right? Work hard, save as much as you can, max out your retirement accounts, and then hope that one day your nest egg is going to be big enough to finally let you relax. That's exactly what Dr. W did. He started off his career, he's a dentist. He started off working, treating patients at 25 years of age. Now, he did what everybody said to do. He was a big Dave Ramsey guy. He paid off all of his student loans. He lived below his means. He invested in index funds, just like, again, all the financial experts recommending. So fast forward, he worked for 20 years. So once he got to the point, he was 45 years old, he was debt-free, and he had roughly $1.5 million saved, combination between a 401k and a brokerage account. His kids were almost in college. On paper, he was winning. But here's the problem. This guy, and like many other high-income professionals, he was starting to get tired. He was starting to burn out, really wanting a break, really not wanting to work full-time. And despite all of that saving, he couldn't afford to walk away. Why? Because again, his entire plan was built around building a nest egg, not what we've been talking about, an income factory. So Dr. W's money was locked up in growth assets, okay? 401ks, index funds, which again, there's nothing wrong with 401ks, there's nothing wrong with index funds, and there's nothing wrong with having a brokerage account. So don't get me wrong about this. But in his situation, being 45 years old, he couldn't touch his 401k without penalties. If he needed any of the money that was in the brokerage accounts, which were index funds, stocks, mutual funds, he'd have to what? He'd have to sell those, because the majority of the index funds that we're being told to get are, like Vanguard, Fidelity, really low cost, low fees. They typically do what? They track some sort of index, like the Vanguard S&P 500 index, or like BTSAX, Vanguard Total Stock Market Index, where it's tracking the Dow Jones. Now, these are great because their growth, you're wanting to hold them again to have this big nest egg. The problem with it is they don't produce any income. And this is what this guy needs. Again, so if he needed money, he would have to sell this, have to pay capital gains tax, which would thus shrink his future income. And this is what he is, and this is what you might be, and this is what a lot of people are at this point. He's this. He's asset rich, but he's cash flow poor, and he's not alone. Again, many people are doing the same thing. They're working harder, they're saving for this giant nest egg, hoping it's going to be enough. But what if you get to the point where you may want to retire, you may want to cut back? You're always thinking, well, what if the stock market's down that year? What if, because nobody can read the future, nobody has a crystal ball. What if you live longer than you plan? Because we don't know how long we're going to live. What if he's following the financial advisor's 4% withdrawal rule? What if he wants to go 5% or 8% because this isn't working? My whole point is when you're following this path, this traditional path, you're always guessing. You're always anxious. You're always thinking about, have I saved enough? Am I going to run out of money during retirement? Which does what? It keeps you working. It's keeping him working. So his real mistake and my mistake before I hurt my hand about 10 years ago is we never focused on building income that didn't involve him. Because right now, all the money that's coming into his life, it's based on him treating patients. He spent his whole career working on building a golden egg, hoping it would hatch into freedom someday. Guess what eggs can do? That egg can crack. Instead, you need to focus on building a factory, a system that's going to produce income every single month, whether you're working or not. This is the mindset shift you have to have if you want freedom. This is how the wealthy view income, is how the wealthy view money. They don't look at themselves producing it. They look at their money or how they're structured producing the money, not them. That creates time freedom. Think about it like this. Think about Henry Ford, Ford Motor Company. Way back when, he didn't build the factory and put the assembly line in just to own a factory. He built it to what? Produce Ford cars. Your investment should work the same way. Your money should produce cash flow month after month. For now, most people, probably you are the only factory. You trade time for money. If you stop working, guess what? The income stops too. But what if you started building other factories? What if you invested in real estate? That pays you every month. There's dividend paying ETFs. There's something called covered call income funds. There's businesses you can go buy passively that don't need your daily attention. There's all kinds of things out there. My point is, these are potential factories that don't need your time. They just need your capital. So let's wrap all of this up and then let's look at the traditional path. We're going to label this path A, and then let's look at path B, which we're going to talk about the income factory route. Okay. All right. So we have path A, the traditional route, probably what you're on, what Dr. W was on, and you have the path B, which is the income factory. Let's start with path A first. Here, we're investing in index funds. We have a 401k. Our goal, a nest egg goal, we want to set it, everything is set up to sell later in life. And we're what? We're hoping for the best. We're hoping that's going to work out for us. And then in the back of our mind, we're always wondering, do I have enough money saved for retirement? Sound familiar? Now let's shift over to what we just spent the last few minutes talking about, the income factory route. And again, this all is factored on active income. You're having to, the only income that you have on the traditional route is active income, which involves you trading your time for money. Over here, it's different. Over here, we have income producing assets. That's what we're focused on. We're focused on things that provide us monthly cash flow, monthly distributions. We set ourselves up where we never, unless you want to, you never have to sell any of your investments when you get the cash. So let's go back to Dr. W. Let's say he starts off working when he's in his 20s. Let's say when he gets in his 30s, he starts learning about this. Well, he can start investing this way. And then when he starts getting the cash flow in, because you get this monthly cash flow in, because he's still practicing, he can simply reinvest the cash flow. If he's later on in life, or if you're later on in life and you have all this money saved up in traditional accounts, brokerage accounts, whatever, you can actually change the allocations and buy real estate, or you can buy a lot of these things that we talked about that are giving you cash flow. You're not having to sell it, not having to worry about the nest egg running out. Over here, your freedom becomes a choice, not a number. Dr. W, when he got to be in his mid-40s, he realized too late that he'd been building the wrong thing. He'd been building the nest egg. But you don't have to make the same mistake. Why? Because you're watching this video, which is great. You don't have to work forever. You don't need a better plan, okay? Excuse me. You don't need to work forever. You just need to build a better plan, one that builds income now, not just someday. Now, hopefully this has gotten you to start thinking about how, not only how you're making your money, but how you're investing your money. And if you want to learn how to turn your current income into a factory, go right below this video and subscribe to the channel. I'm going to show you, and I've got hundreds of videos that are focused on helping you get to the point that work is optional on your own terms. And if you want to get started in learning more about my favorite real estate investment, great. Then you can follow me next over here at this video.